Hello, everyone. This is Joshua Hayes at BigWaveTrading.com coming to you with November 14th market wrap-up for November 17th Monday stock market session. I'm going to try to go through these a little bit quicker today because I want to show you some long-term charts that are going to be a little depressing, but we're making money on the short, so it's okay. I just wish I was more short, like I keep saying. I believe I've made a mistake this year by not being more heavily short like I was in 2000 and 2001. But it's okay. I'll be ready for the next bull market, and I'll do really well. So let's go ahead and start. The Dow Jones Industrial Average fell 3.82% today. When it fell, it was one of the days where the market started off weak, started to cup, and the cup pattern started to come back towards the end of the day, and we were down almost flat on the Dow Jones Industrial Average, when then all of a sudden in the last hour, the market just broke apart, and it was kind of depressing to watch, kind of frustrating to watch, but there is slightly good news. As you can see here, the lows held above the first day of the rally attempt that was yesterday. Yesterday's volume was much larger on the Dow Jones Industrial Average than today's sell-off, which was below the 50-day volume average. So that's one positive. So let's go ahead and move on there. The VIX jumped up to 66, still showing that there's a lot of fear in this market, which means when we do rally, we should be able to get some nice, big, juicy price gains as long as the chart's set up correctly. If they don't set up correctly, I've got to wait for them to set up correctly. I can't risk my money. This is how I make a living, and I do not like losses. So with the high VIX at 66, the market's volatility index is high enough to be able to produce gains for us whenever we do rally, but it doesn't look like it's going to be anytime soon, but you never know, because now let's go to the S&P 500 and see the same thing. The S&P 500 did make new lows yesterday, but the reversal on big volume was very bullish. Today, like I said, it did the nice cut pattern, but at the end of the day, all the indexes, every single one, sold off hard and came around and closed near the lows of the day. As you can see here, 873 close, 869 low a day. Bad enough. Still held above the lows. Volume was lower, below the 50-day volume average. A little positive to work on. Still a disappointing day. The United States dollar is trying to work itself back into this flag pattern, and that isn't necessarily the most bullish thing, but what is most important is it holds the 50-day moving average and moves higher. We must continue to see a stronger dollar, I would think, to be worthwhile to stay in cash, or else being in cash isn't going to really mean anything if this dollar ends up rolling over. Hopefully it goes higher, because I've been listening to some things from Peter Schiff, and it's not very bullish. So let's pray that he is wrong. But let's go ahead and move on to the NASDAQ 100. As you can see, it fell today, closing near the lows of the day. 1179 closed. 1176 was the low of the day. Volume was lower than the day before, which is bullish and semi-bullish. It's not the most bullish things. And then the NASDAQ, we even closed on the NASDAQ, as you can see here, at the lows. The lows of 1516 are even above the opening of 1496. So the NASDAQ had an inside day range on lower volume, which is technically bullish, even though the NASDAQ was down 5%. It's still bearish in the long term, obviously, because we're coming from a downtrend. And like I said, unless the index price is above the 50 and 200-day moving average, it does not pay to go long. Look at the relative strength line of the NASDAQ hitting new lows, low, 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 while the price barely hits new lows. So the NASDAQ, which is like full of basically your high technology stocks, is actually performing relatively very weak to the overall market. Let's look at the S&P 600. As you can see, it had the same thing as the NASDAQ did. The open yesterday was 243. The low day today, or the close, was 245. It managed to close within that range. Volume was lower on the S&P 600, so it's still looking decent, but it's not looking the best, because obviously we're still in a downtrend, which means shorts is still where it's at. And I want to tell everybody, today I have 33 shorts, 32 were down. The last 2 days ago, I had 32 shorts, 32 were down. I said 31, but LLL was not in the system that I use to track my positions. I did not add it in there, so that was my mistake. LLL is now down 26% for me. But today, 32 for 33 after being 32 for 32 2 days ago. That kind of win-loss ratio proves that being short is correct. So the Russell 2000 today was down 7% after being up 8.5%. It's just not a great day too, but volume was lower, so that is something to work on. I want to look at the gold index. Gold is holding the support area, but it's still below the 50 and 200-day moving average, and both are trending down, so gold is still not the right investment. And let's take a look at oil. Oil's had another negative day, closing down at 56.31, and that is almost a new low. 56.16 isn't the low. 56.31 is close to the new low, and it hit 55.69 intraday, which is an intraday new low. So oil goes lower and lower and lower and gets closer and closer and closer to $40. That would probably help the economy a little bit, but every other aspect of this economy is so bad that I don't think it matters. Now, let me see how much time I have left. Okay, I have plenty of time. So now what I want to do is show you some charts that is not very pleasant. This will not be nice to see, but this is the long-term situation that we are in, and we have to be honest. This is a monthly chart of the NASDAQ, as you can see. Now, I want to go out to a Zoom 3 to show you from 1990. Notice as we rallied after the Republican Congress capital gains tax cut in 1995, we rallied each month on higher and higher and higher volume until we got to the 2000 top when we rallied on huge volume. When we sold off in 2000, we sold off on heavier volume, the big red bars. And even going into the 2002 lows, there were 2 big months of heavy selling. But then we had a nice end of 2002, a nice 2003, and then here's the thing that should be noticed within the uptrend from 2003 to 2008. Notice in 2004, there are 3 big red volume monthly down months here. Notice at the end or beginning of 2005, there are 2 mixed with 2 up months, canceling it out. Notice in 2005 here near the end, there's another one above average, another selling month. Now notice in 2006, the second to last year of the bull market, there are 3 months of heavy selling. So as we were rallying the past 5 years, big institutional funds were bidding up the market and interesting the retail crowd to help bid up stocks as people chase momentum, and then they would dump heavy blocks on the market. This then got more evident in 2007 with this month right here, and then it got even more obvious right here, and that would be the month of August. And then in the month of November, another huge month of selling. Now let's get in closer. And you can see after November, December was a heavier month of selling. January was. February was huge. March was pretty big. A couple of months of rallying. Sorry, I don't know how to say that word very well. In April and May, that's whenever we found DGLY and PDO. Then we go right back to the selling. Heavier selling again. Lower volume rally, but it's still higher volume. But then another month of heavy volume selling. And then another month of huge volume selling. And this was by far the worst month. October, I mean, look at this, down 18% right there on the NASDAQ, and then followed by another month of heavy volume selling. We're down 11% on heavy volume. So since the middle of 2007, boom, 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 boom. We have been nailed with selling. And we can see this also in the New York Stock Exchange. 2006 rally, selling. 2007 rally, selling. Huge selling in 2007. Then above average selling, above average selling, above average selling, above average selling, above average selling. Bottom line, it's not healthy and it doesn't look good. Let me see how much time I have now. 9 minutes. I want to show you the NASDAQ 100 index right now. As you can see, it's holding the lows nicely here, so we have something to build on in this little consolidation pattern. Volume was heavy on the last uptrend, and it was heavy on yesterday's bounce, but today the heavy volume was still lower than the day before, so this is something to work on. These are leading stocks. We've got heavy volume starting to show back in to the IBD 100. This might be positive on the short term, but bottom line, this is some ugly monthly charts. And let's look at the NASDAQ to close it out. Look at all those big, tall, red volume bars. So I'm going to go and wrap it up there. This is Joshua Hayes at BigWaveTrading.com. Have a great weekend. We'll come back on Monday and attack the market and do what we do. Aloha.